how big is our Malaysian market in terms of size? So it's roughly about 3.6 trillion thing. But the conclusion is this: the more money that Bank Negara and the government actually prints, the more fixed deposit. So you can draw a parallel line actually, right? And this is actually very important for you as an investor. Can you help me rank these 8 items here? Which one is the riskiest and which is the lowest risk, or anything in between? That's the perception that ASB is like least risky. But at the same time, when you look at how they structure the portfolio and completely rely on equity to actually deliver the kind of returns, actually is more risky than EPF. Here's the problem. 3% of Malaysians can afford to retire. An official says 54% of EPF members age 54 would have less than 50,000 in their savings account. However, here's the landscape. There's 3 groups of people. Now, what's not surprising, but hopefully it's surprising to you guys, is that fixed D and savings still form a bigger chunk than investments. And yet here comes another, for me, quite a saddening statistics. Even though we have grown in terms of NAV, even though we've grown in terms of number of funds being offered, the average return, the highest average return, this is the group, okay? It's actually between 2 to 4%. I'm going to ask you a question now, okay? Who created the low-cost index investing? The first guys that actually did it was actually this guy called Edward Renshaw and Paul Fieldstein, okay? They wrote a paper and it's entitled The Case for an Unmanaged Investment Company, which is the basis of ETF. And this guy called John B. Armstrong actually wrote a paper to actually defend mutual fund. That time he was with Wellington Asset Management. He was in the mutual fund industry. And he was so against it, wrote against it. But over time, the data showed him otherwise. He turned over what we call a new leaf. So what are the advantages of ETF, portfolio allocation? The second advantage of ETFs is that you don't pay high fees on one financial product. Third advantage is you just let the market do its work. The law of averages plays to the patient. Some companies will do very well, but at the same time, there's also some laggards. The natural diversification of your portfolio is done for you. Here's the disadvantage. Like from 2012 until 2020, actually the S&P 500 went nowhere. It was flat. Only when the most recent years after COVID, that's why it went up. So if you're in the market for a short term, let's say 5 years, 6 years, the ETF may not work to your advantage because it's flat. Okay. The second thing is the law of average plays to the disadvantage is because there's some losers in the S&P 500 and there's some winners. That is the problem with over diversification, 500 stocks. This will actually dilute your returns as opposed to concentration. So is there an even better ETF than just the S&P 500? Definitely. There's 2 options. One is you go Google, okay, but how much time do you have? Second is you rely on the experience of others, research that's been curated, and I've packed it into like a 5-hour course.